Ladies and gentlemen, how are we doing? Matthews here from Emmanuel Forex Status. I hope you're doing great. So I'm here with a trade recap of USD Swiss, a beautiful 14-hour trade, about 140 pips, a beautiful trade, right? So let me just delete all this and take you through my reasoning of taking this particular trade. All right. So let me just show you everything from start to finish. Okay. So the first thing I looked at is the overall direction of the market. What is the market doing right now? So if you go to the higher time frame, in this case I use the 4-hour time frame, you realize that the market has been in an uptrend for a while. Okay. So when the market is going up, you're looking for buying opportunities, and if the market is going down, you are looking for selling opportunities. All right. So let me just show you right now. So if you come here, you clearly see that we had this nice drop based rally. All right. When you see that, that's quite significant because it shows you presence of smart money in the market, right? So what you do is you take note of that. So let's just do this. Okay, right here. Then what do? We go to the lower time frame. Let's go to the 1-hour time frame. Let's go to the 1-hour time frame, and that level you're seeing on the 4-hour time frame, this is this level right here. Okay, so let's drop to the 45 minutes time frame like that. Okay, let's try to drop even further. Let's go 30 minutes. So what I'm looking for here is the last bearish candle before the bullish move. All right, which is my order block. So you find the high and the low of that particular candle. So I'm targeting this candle right here, the high and the low of that particular candle, and then I'm going to extend this to the right side. Okay, like that. Awesome. Okay, so you have your drop base rally. Let's try to drop even further. We see what we can actually find a good level like that. Yeah, so let's get this one right here. Nice. So we have this level right here. Good. Now let's go back to the 45 minutes time frame. Now that we've identified our order block, the next thing to do is to identify what we call liquidity areas. So liquidity can be in form of trend lines, it can be in form of equal highs or equal lows. And another one is what we call the Asian range, right? So you come here. So the next thing is to identify liquidity. So if you see right here, we had a lot of liquidity here. We had a lot of equal lows right there. So you can just do this. This is an equal high, equal low. This is an equal low, and this is another equal low. So this is your liquidity area. So right here, go ahead and mark that as liquidity area, as liquidity right there. And remember, this is a drop base rally. So we input that drop base rally demand zone right here. We just increase the font better. Okay, after you've done that, what's the next thing? By the time I was analyzing this market, I think it was around this level right here. Okay, so let's just finish inputting our orders, right? I mean our labels right there. So this is our lower low here, like that. So what's the next thing that you're going to look for? You're going to look for your entry and exit area. So my stop loss is always below the lower low or above the higher high. So and my target, I was targeting this level right here. So right like that. And then my stop loss just a few pips below the lower low. And that's how I get my sniper entries, right? That's how I get my sniper entries like that. Yeah, It was a beautiful trade. It was a 1 to 14 risk to reward ratio. It was an amazing trade, right? You can clearly see that after this happened, what did you have? We had break of structure right here to the upside, showing you that this downtrend which was here is done. When you have that, that's a change of character right there. So you have a nice drop-based rally, demand zone. We have liquidity which was taken out with a massive candle. Then what did you have after that? We had a nice push to the upside. The market price retraced a little bit, and eventually it pushed to the upside. So this is a very important. This move right here is actually very easy for you to actually get out of the market right here. Why? Especially if you've not predefined your risk, you get out because you'll be scared when the market has to come against you like that. So you always have to predefine your risk, and make sure you are okay risking whatever amount of money you are risking. All right. So it's extremely important. All right. So this is how this trade was. It was absolutely amazing. And guess what? This trade was shared with our private community. Let me just show you right now. This is the trade right here. You can clearly see that we had a nice drop-based rally, and then we had liquidity right here, and then we had a nice, actually forgot this part here. We had a nice compression right here. We had a very good compression. Of course, after a compression, what comes is an impulsive move. Always look forward for that. So it's also called a falling, a falling wedge. So what happens is that usually it actually drops, pushes the downside. And then if you use this indicator here, the Asian range indicator, you're going to see that price literally just took out the Asian low right here, pushed to the upside after taking out this Asian low. So I always also use the Asian killer session as a confluence. All right, so you always have to make sure that either the low or the high of that range is taken out. It's extremely important, and that's how we managed to catch this beautiful, absolutely beautiful trade. This trade was sent yesterday. Look at this, amazing. After having our beautiful confirmation right there, the market rallied to the upside like crazy. All right, so let me just show you something else. We actually took this trade first from here. You see, if you can actually see here that we had this level right here, which was also looking very good, and then we had this like trend line liquidity right here. So this was also a valid setup, and you can clearly see that when I posted this trade, the market had already reacted like that. Like I always say, on a trade by trade basis, you don't know what's going to happen. This was a valid trade to me, a valid setup for me, but this one didn't work out. Guess what? I had to go and look for this other setup right there, which was also all valid. So don't be scared to take the next trade because the other trade was a loser. Look at this. This is the same trade which failed from here, but guess what? I caught it from here. Both of them are meeting my criteria. Not trying to revenge trade, but looking for my setup. Once my setup presents itself, I'm obligated to take that trade because I know that on a trade by trade basis, anything can happen. So this is how we caught this particular beautiful trade. I had no idea that this trade was actually going to work. What I was just doing is that I was just following what my age tells me to. All right. So this is how we caught this amazing trade, and the members in our private community took this particular trade, and it was an amazing, right? It was like that. So you guys, I hope you've learned something from this little recap. I hope you find it important and beneficial. If you do, kindly subscribe, like the video, comment in the comment section. Let me know what you've learned from this video, right? Okay, you guys, until next time, goodbye.